Institutional interest in digital assets is no longer speculative, it's strategic. Globally, over $100 billion in assets are now allocated to crypto-related products, including ETFs and direct holdings by sovereign wealth funds. In the US alone, Bitcoin ETFs saw over $10 billion in inflows within their first quarter of launch. Meanwhile, pensions funds in countries like Canada and South Korea have begun integrating digital assets into their portfolios. Against this backdrop, Malaysia is at a crossroads, with regulatory reforms underway and Islamic finance considerations in play. The question is no longer if institutions will adopt digital assets, but how. Let's start by understanding what's driving the global momentum. I have an honor to welcome you, our guest, Tang, General Manager APAC, Luno Malaysia. I want to say thank you very much, Aaron. How are you?
I'm good. Thank you for having me.
All right, we're going to go straight into our discussion, especially financial within digital assets. We know that institution adoptions of digital assets is gaining big momentum today, from ETF to sovereign wealth funds. What's driving this strong demand from institutions, and how different is their approach compared to retail investors, especially, Aaron?
I think in today's landscape is, again, the search for returns. So, for example, companies, institutions may not have been satisfied with certain returns from certain assets they're already investing in. So they're looking at digital assets as a form of asset that could give them superior returns, not just investing purely into that, but as part of their portfolio. And I think to your second question around like what has changed from institutions, I think institutions, they are looking at long-term investing, and they're not just going to dive in like some individual investors into the latest and greatest thing. And I think digital assets have shown over time that they are here to stay, and they are a reputable asset class today.
We know that good return and long-term investing, that is one of the why strong demands in the markets right now. And 5 years ago, digital assets were often dismissed as too volatile or speculative, as we call it, uncertain. What's changed in the global landscape?
I think regulatory acceptance, regulatory progress is one of the things. So as you mentioned earlier, Nina, there's so many progress in the US in terms of regulations. The government is much more accepting of digital assets versus, say, 5 years ago. And then I think in terms of time, the assets themselves being tested in the market, they've gone through some ups and down cycles. And then I think from a technology perspective, the assets themselves have also proven to be robust and secure. And maybe 5-10 years ago, people were saying this is an unknown technology. But I think now most people are very, very understanding that these technologies are secure.
This technology is secure. That is very important. We know that this is very safe, and we have seen historically from time to time the ups and downs. And after all of that, we still have trust within that. From institutional investors, diversification, we know that is everything for them. And where do digital assets, we can say that realistically fit within the traditional institutional portfolio alongside equities, bonds, and even real estate?
Sure. I think today digital assets fall into what we call as alternative assets. So I think traditionally you have most of your portfolio, for example, in stocks or bonds, and then alternative assets may be, say, 10% of that portfolio or 5% depending. So it's going to be different for every institution, but I think even financial advisors today are asking the question, should your allocation be 1%, 5%, 10%, and so on?
And if you look at the sovereign wealth funds and even pension funds globally in this context, what lessons can Malaysia institutional investors draw from their strategies, the do's and don'ts that we can learn and even adopt?
I think the biggest lesson is that it is quite a process. I mean, if you look at the global landscape, it's not that a huge bunch of wealth or sovereign wealth funds have already invested into digital assets. There are some governments that have digital asset holdings. There are some pension funds that have digital asset holdings. But I think the learning is that it's going to be a process, right? It's not something that you jump into immediately. Take the time to learn about the technology and get comfortable. I think maybe sometime down the road, whether it's 3 months, 6 months, then people may feel comfortable making that decision.
Making that decision comfortable, especially.
Yes.
That's the main concern. But some critics argue that digital assets are still highly concentrated or based on high tech. How valid is that concern today?
I think historically, if you look at the correlation between, just look at Bitcoin because it's the main digital asset, the most, the most reputable. Just look at the correlation between Bitcoin and say something like the Nasdaq, which is the tech index, right? I think historically the correlation is say 0.2, 0.3. It is somewhat correlated, but of course it's not as strongly correlated as say buying a Tesla stock itself, right? So I think over time we have seen the correlation go up and down, but I think market acceptance has told us that people are actually very, very interested in the diversification properties of Bitcoin and digital assets. And it may not be as established as gold today, but digital assets are very, very young. It could take some time before they get to the level of gold.
Trusting digital asset, maybe it's not easy. Is it safe for us to invest or bring in more money? But that's where the framework regulations come to make sure that it's very secure and making it safe and comfortable for investors to make the decision. And Malaysia has taken steps to regulate digital assets under the Securities Commission framework, under the SC. And just recently, there have been proposals to ease crypto listing requirements and strengthen client assets safeguards. How far do these reforms go in giving institutions and the confidence to even enter the market? Simply, we can say that with this regulations framework progress for Malaysia's, how far do you think the confidence in the market right now?
I think actually the frameworks, the regulations themselves, they actually give everything that is required by an institutional investor to want to invest into digital assets today, right? So everything is already there. I think the only thing is a matter of time and perhaps what you mentioned, Nina, comfort, right? The rules are there. If you want to buy digital assets, you can just go to a crypto exchange, digital asset exchange, sign up, and then you'll be able to buy almost immediately. But I think the comfort, the acceptance, the internal sort of, support, that part is the one that we need some time for.
And finally, if you have an advice for a Malaysian pension fund or even sovereign wealth fund today, what is the first step should they take?
I think it's all about having that conversation early, starting early, because as we mentioned, it takes some time. Internally, you need to get support. You need to get people understanding this new asset class. And yeah, come talk to one of us in the digital asset industry. We'd love to help. It's again a very, very new industry, but I think it's something that's so super, super exciting. And with the regulatory and government support, is the way of the future.
Again, Aaron, this is very insightful sharing. And we have reached to the end of our session again. And thank you for helping us understand the institutional adoption of digital assets across the generation, across the year. What are some of the challenges and what are the opportunities looking ahead for our future sectors? Again, I would say thank you very much to Aaron Tan, the General Manager, APAC, Luno Malaysia, and hope to see you again.
Thank you, Nina.
All right, definitely all of our discussion here will be featured in AstroAWANI.com and across all social media platforms. And that's it from me, Nina Rosamond, and I'll be passing to my colleague Ibrahim Sani, who'll be taking over right after this.